Most traders imagine failure as something sudden. They imagine a catastrophic loss, a rogue trade, a moment of madness where everything collapses at once. But if you actually study how traders fail, really study it, you'll notice something uncomfortable. Most of them don't explode. They erode. Their accounts don't vanish overnight. They bleed slowly, quietly, almost politely. A little loss here, a little impatience there. A series of trades that never quite follow the plan, but don't look reckless enough to stop either. And that's what makes Haste so dangerous. Haste doesn't announce itself as a threat. It doesn't feel like stupidity. It feels like decisiveness. It feels like confidence. And because of that, traders rarely fight it. They justify it. They defend it. They build entire identities around it. Until one day, they look at their equity curve and realize the damage didn't come from ignorance. It came from being in a hurry. To understand haste, you must understand emotional discomfort. Haste is not about time. It is about intolerance. Intolerance of uncertainty. Intolerance of waiting. Intolerance of not knowing. The market constantly puts traders in a state of maybe. Maybe this is the setup. Maybe it will break. Maybe it will fail. Haste is what happens when a trader cannot sit inside that maybe. So they act. Not because the market confirmed anything, but because action feels better than uncertainty. Haste is the urge to replace probability with certainty, even false certainty. When you click early, you feel relief. You feel involved. You feel like you've done something. But relief is not an edge. And the market charges heavily for emotional relief. Traders rush for different reasons, and these reasons are psychological traps. Some of these are: 1. Fear of missing out, FOMO. FOMO is often misunderstood as greed. It isn't. It's regret avoidance. The trader isn't thinking, I want more money. They're thinking, I don't want to feel stupid watching price run without me. So they enter early. They don't want to miss the story. They want to be part of the move, even if the move hasn't confirmed itself yet. But markets don't care about participation. They care about structure. And FOMO consistently puts traders on the wrong side of structure. 2. Impatience with waiting. Waiting feels passive. And most people associate passivity with weakness. But in trading, waiting is strength. Waiting forces you to sit with doubt, to accept that you might not get a trade today or tomorrow. Many traders can't handle that. They feel like they're wasting time, so they manufacture trades. They enter not because conditions are right, but because waiting feels unbearable. This is one of the most expensive misunderstandings in trading. 3. Ego pressure. Ego wants validation. It wants to feel capable. It wants to feel sharp. It wants to feel right. So it pushes you to act, to prove that you see the market. But the market doesn't reward being right early. It rewards being right with discipline. Ego wants speed. Professionalism wants patience. 4. Boredom. Nobody talks about boredom, but boredom ruins more traders than fear. Most trading days are dull. There are no setups, clarity, or excitement. Boredom whispers lies. It says, you should be trading. You're falling behind. Others are making money. So traders trade to escape boredom. Those are almost always bad trades. Haste damages traders on multiple levels. 1. Structural damage. Rushed entries mean poor location, tight emotional stops, weak risk to reward. You enter before price confirms, then punish yourself when price does what price naturally does. 2. Psychological damage. Repeated rushed losses erode confidence. You start doubting your strategy, your analysis, yourself. But the issue was never your system. It was your timing. 3. Behavioral damage. Haste creates habits. Bad habits. Once you normalize rushing, patience feels wrong. Even good setups start feeling uncomfortable because they require waiting. At that point, trading becomes emotionally exhausting. One of the most painful experiences in trading is this. You enter early. You get stopped out. Then the market moves perfectly without you. This happens so often it feels personal. But it isn't. Markets shake out impatience before commitment. If you rush, you place yourself exactly where the market expects emotional traders to be. This is not bad luck. It is structure exploiting predictability. Professionals are not slow. They are selective. They wait through noise, chop, false moves. Then they act quickly and decisively. Haste is fast because it's nervous. Discipline is fast because it's prepared. Same execution speed. Completely different mindset. You don't defeat haste with motivation. You defeat it with design. 1. Non-negotiable rules. No confirmation, no trade. 2. Forced delays. Pause before entry. Most bad trades collapse under patience. 3. Limited exposure. Less screen time. Fewer trades. More clarity. 4. Emotional journaling. Write why you're entering. If the reason is emotional, you stand down. The market is not in a hurry. There will always be another setup. But there may not always be another account. Haste turns trading into gambling. Patience turns trading into a craft. Slow traders survive. Rush traders donate.